Let's take a live look right now at the big board on Wall Street. You see the Dow Jones Industrial Average off about 52 points right now at 25.4 and change. It opened this morning off more than 200 points, continuing last week's massive sell-off. Last Friday alone, the Dow plunged 666 points. And here on this Healthy, Wealthy, and Wise Monday to tell us if it's time to take some action is Jack Lansing from UBS Financial Services. Jack, good morning.
Good morning.
Yeah, please, let's wipe the sweat off and tell us it's going to be okay, right? That's first things first. You know, it gets scary. I mean, when you see a plunge of that amount in one day, what should investors be doing right now?
Well, I think one of the things that they should think about is how did this cause you to react on Friday? What kind of savings have you set aside? Are if these are longer term savings, if your horizon is 5 years or more, this just goes with the territory.
All right. So if you're sitting in cash waiting for that pullback that we're all talking about at some point, is now the time to buy?
Well, I think the question is this going to continue? This was close to a 5% pullback if you include what happened this morning.
Right.
It could go a little deeper than this, but I don't think it'll be very long lasting. You could see maybe up to a 10% correction.
Okay, so to me it's like buying on sale if you have the money to do so.
Correct. Yeah.
But people have been talking about a correction for quite some time. Do you think this is it, or is this just a little blip and then maybe down the road somewhere?
Well, I think what investors should expect is even in a bull market, you're going to have these types of corrections. We've had 5 years with very little volatility. The only day I could think of prior to this was after the Brexit. The market sold off at a level like it did before. You can expect in a normal year, in a bull market at this level, we're probably going to have 4 or 5 days like this where the market's going to have a 500 point or more downturn. You'll have 15 or 20 days somewhere like 200 to 300 points. So it's a normal part of the overall process.
But to ease people's minds, I mean, 10 years ago, a 600-point drop, oh my goodness, that's a lot.
It was a
now,
very big pullback.
It's not that big a deal.
Right, and it's important to remember what caused this. It was good news.
Right.
It was the data that came out that employment, the wages are picking up. So it was the good news about the economy that said, all right, well, we're kind of concerned, what will the Feds do next? That's what triggered this.
All right, so what should we be prepared for this year? I mean, it's only the beginning of February.
Right, a lot has happened already this year.
Right.
Again, most were about 3/4 of the way through corporate earnings. Excellent earnings report, good upgrades going on there. I monitor over 200 or 300 stocks daily. That's my job, and we see nothing but green lights going. So I think we're still expecting a pretty good year in the stock market.
All right. What could trigger a market sell-off?
I think something to watch for is if we see inflation really start to tick up very strongly and the Feds are forced to come in and put the brakes on, that could really slow things down a little bit. Again, not a terribly likely scenario. We still expect that you'll see probably 3 rate hikes this year.
All right. And so investors should still be bullish?
Investors should be bullish if you've got cash on the sidelines. The bond market is also really on sale right now. The yield on the long-term bonds is where we thought it would be 12 months from now. So don't neglect that part of your portfolio.
Good to know. But tighten your seatbelts and hang on for the long ride.
Year like this. Yeah.
All right, Jack. Thank you so much.